Hi, everybody. Thanks for joining me today. I've got Jerry Wilson from the Jerry Wilson Group here in Portland, Oregon. He is a phenomenal residential and commercial lender and has been doing this for 20 plus years. Jerry, thank you so much for being here on Brief and appreciate your time today.
Happy to be here, Heidi.
Hey, so I wanted to talk a little bit about, I know there's been some changes. Today is first full week of May 2020. There's been some changes that you've shared a little bit with me in regards to the jumbo loan market. Right now, we know there's hesitation on getting the builders financed that are doing the higher priced homes. Tell me what you're finding as a mortgage broker. What's going on the retail side in getting those jumbo loans for our home buyers?
Well, Heidi, and it's obviously been a hot topic over the last couple of months because that jumbo market, and keep in mind that's any loan above 510,000 in Oregon, had been completely frozen with COVID-19. And the reason being is that product is a Wall Street driven product. It's not insured by Fannie Mae and Freddie Mac, the government agencies. So there has to be a demand for that product. And the investors who invest in that product really wanted to wait and see what the government's position was going to be on forbearance because they didn't want to have a bunch of large loan amounts like $1 million and then borrowers not have their payments for 3 to 6 months. Well, last Thursday, we had a complete breakthrough in the product where about half of the investors came back into the marketplace.
Wow.
So we're really, really excited about the recent events. I think with some of the liquidity that's going back into Wall Street, and that we're kind of getting through the COVID-19, 2 months later, brought some confidence to those Wall Street investors. So at Cross Country Mortgage, we had 9 investors, jumbo investors, prior to COVID-19, and 5 of them came back on Thursday. Now, keep in mind this credit score requirements, loan to value, and underwriting requirements are more stringent, but we're happy with today what we just got back last Thursday.
Okay, so how does that affect them? Say someone is getting a home built, and obviously there's a lot of homes out there in the Portland metro area that are priced over 510,000. So,
Yeah.
And that is the loan amount of 510,000. So let's
Correct.
say someone's buying a home for 650, 700,000. How does that change of last week affect that home buyer, and what type of criteria are we looking at?
So we were able to go down to a minimum of 680 credit scores. So those credit scores have now been bumped up to 700.
Okay.
And instead of maybe 20% down, you might have to put an additional 5%, 25% down as well. So I recommend those clients to circle back to their loan officer and see what changes have come in that product line prior to the COVID-19. But also we had a little bit of a workaround that we were able to do a first and second loan combination. So a 510,400 conventional loan, and then a piggyback home equity line of credit up to 350,000. And so we were able to get to an $860,000 aggregate loan amount, and that has helped out our clients as well.
Wow, no kidding. And so when they sell that house that you did that HELOC on, they would just pay that loan off, right?
Yeah, it's instead of just doing one loan for 860,000, you would make 2 monthly payments, but that aggregate loan amount will still get you to an $860,000 loan amount. So that helped bridge the difference when we had some of that jumbo loan product eliminated.
That's awesome. Sounds like you guys are getting really creative there at the Jerry Wilson team in Portland. Jerry, thanks so much for your time and look forward to chatting with you again. Have a great day.
Thank you, Heidi.